Good afternoon, everybody, and welcome to Tech Talk here at MarketStream.live. My name is Joseph Cusick from the Cusick Group. Securities offered by MoneyBlock. This is where we're going to take a look at charts. We're going to look at options analysis. We're going to give you ranges for three stocks that are going to have events earnings. So we want to take a look at Netflix, ticker symbol NFLX. Now, it's trading at 132.17, down 72 cents right now. That's down about 0.5%. Now, if you take a look at the options that are expiring in 2 days, they're pricing in going into this event that the stock could either be up $11.83 or down $11.83. So let's put that into context. That means that the stock could go as high as 143 or as low as 121. 120 and some change to 143. So you're talking about a pretty significant range, but it's a $132 stock, and it has been known to move into earnings. Now, over the next 9 days, they're pricing in a $13 range, either up or down. Now, taking a look at the implied volatility rank, that just gives us an idea of how violent they expect this potential move to be in the stock. And with the rank coming in at 60%, folks, they are pricing in some potential violence. Once you get over 50% in implied volatility rank, that's telling you that there's an expectation of violent moves, especially if you get in the 60, 70, 80, 90% level. Now, the next stock we want to take a look at is Kinder Morgan, KMI as the ticker symbol. Stock's trading at $22.44 right now, down 11 cents. Now, the options that are expiring this Friday are pricing in for going into this event tonight, the potential for this underlying to go either up or down 80 cents. What does that mean? That means that Kinder Morgan trading at $22.44 with an 80-cent estimated move right now could basically be up at $23.40 or it could be down at $21.60. That's the range that we're looking at, $23.40 to $21.60. How does that help you? Well, going into the earnings announcement, it's basically giving you that range that's being priced in by the options market makers. Why is that important? Well, these are the folks that have to buy and sell all of the different bids and offers that come in and get hit in the market. So they're going to want to price in as effectively a potential move into this market. Now, over the next 9 days, they're pricing in basically about a buck move. So 23.40 all the way down to 21.40. The implied volatility, though, is very low. It's actually at 1%. So the rank is extremely low. Not a heightened expectation of big violent moves, even though we're seeing an 80-cent move being priced in going into this event for the rest of the week. Now, some critical levels that you're going to want to watch on Kinder are going to be 21.5, 21.30, and $20. Those are the levels for short, mid, and long-term support. On Netflix, I want to retrace a little bit. On Netflix, watch 128, 123, and 105. That's short-term, mid-term, and long-term. Now, the next and final name that we want to take a look at is Canadian Pacific. Now, this one had a little bit of a precursor to it, or in other words, the tone was being set. One of its peers, CSX, came out, reaffirmed guidance for Q1 as well as fiscal year 2017 EPS, earnings per share. Now, that ruffled some of the transports and specifically the railroads. People were starting to say, well, why are they doing that? And why are we not feeling better about the transports, especially with what potentially be coming down the pipeline as far as infrastructure plays, fiscal stimulus, and growth in general? Well, Canadian Pacific is down $1.64 right now at 144.24. So CP is the ticker symbol. With it down 1%, you're basically thinking, well, the move's already been priced out, like what we've seen in other of the financial stocks. After Morgan Stanley came out, actually had good guidance, good earnings. Then you had Goldman Sachs. They all were going down. You saw some profit taking going on. Right now, if you look at the options that are expiring this Friday, so they have 2 days left until expiration, they're pricing in that this $144 stock could either be up $4.70 or down $4.70. That basically gets you at 149 on the upside, and it gets you to about 139 on the downside. They're pricing in over the next 30 days a $9.30 range. So you're really talking about some decent movement. 153 to the upside, and you can see it down as low as 135, 134 on the downside. So there's some decent range in here. Taking a look at the implied volatility rank right now, it's coming in at 25%, so it's relatively low. Anything below that 30, 40% level, I'm until you get over 50%, not a heightened expectation of violent moves. So those are the 3 stocks that we looked at today. They have earnings after hours. You can take a look at those ranges that I gave you. Basically a validation of whether or not this really can help you with your trading and investing. Join me at 4:30 Eastern time here at MarketStream.live. I want to wrap up all of today's action. Talk to you then.